Good morning and welcome to the Global View on this Friday. I'm Andrew Gagan. Great you can join us here at AusBiz. Let's take a look at all that action we saw overnight, mostly a negative session with markets there. Investors digesting the new tariffs on foreign-made vehicles and parts imported into the United States as America's trading partners threaten retaliatory tariffs, with investors on Wall Street looking for a direction ahead of the next round of announcements on April 2nd, so-called Liberation Day there, will more be announced by Donald Trump. Stocks oscillated between gains and losses while the car makers slumped. Ford and GM hit particularly hard. However, the EV makers Tesla and Rivian rallied as they're seen as less exposed to the new duties due to their domestic manufacturing operations. US listed shares of global mining giants Rio and BHP, they fell back. That's as tracking the copper price, which was down substantially after President Trump announced those tariffs on auto imports, which could dampen demand for copper. Whereas shares of gold miners tracked the price of bullion higher as it hit another record. And GameStop shares tumbled as it seeks capital to purchase Bitcoin. Well, a revision of US economic growth for the fourth quarter rose at an annualised rate from 2.3 to 2.4%, although consumption was revised down from 4.2 to 4%, and core PCE inflation was also revised down from 2.7 to 2.6%. And jobless claims slipped last week, while the jobless rate held steady in March. US Treasury long-term yields have risen to their highest level in more than a month as investors consider the inflationary impacts of President Trump's tariffs on imports of vehicles and parts. The 10-year yield was around 4.37%, the 2-year close to 4%. And the US dollar mixed as traders look ahead to those tariffs scheduled to be revealed by President Trump next week and just how severe they're likely to be, while the Canadian dollar and Mexican peso weakened after he announced those auto trade levies, which will hit car manufacturers in those two countries particularly hard. The Aussie dollar is trading at 63 US cents, and Bitcoin is trading above 87,000 US dollars. Oil prices have edged higher as traders assess tightening crude supplies along with the impact of those new US tariffs on the global economy. Brent crude futures up around 1/3% at $74 a barrel. As I mentioned, copper has tumbled close to 2.5%, while iron ore is up around 1% to 104 US dollars a tonne, and gold claiming another record peak as investors seek the safe haven asset in response to escalating global trade tensions. Spot gold climbing more than 1% to close to $3,060 an ounce. Gold futures hitting $3,071 an ounce. So to get a market response to what we've heard, particularly as far as Donald Trump's tariffs are concerned, I caught up with Peter Cardello, Chief Market Strategist at Spartan Capital.
Well, obviously the market is still trying to sort out, what the consequences are of a prolonged trade war, if there will be a prolonged trade war. And I must confess that we basically held pretty good today. I thought the market would have a rockier session. We closed on the downside, but at one time during the session, we saw the indices actually tick up. And so I think that's what's going to happen over the next period, at least in the short term, until we see the effects of these tariffs. Now, remember that on April the 2nd, the reciprocal tariffs are going to go into effect, and that's going to be interesting. What we're hoping for is that somebody blinks, whether it be our trading partners in Europe, whether it be Canada, whether it be Mexico, whether it be China, etc. In fact, speaking about China, Trump made it quite clear that he's going to probably be somewhat lenient when it comes to imposing tariffs on China because he wants to make a deal on TikTok. And so perhaps maybe there would be some leadway. If not, if the trade war goes into full effect and it stays for a sustained period of time, then unfortunately, I think the markets are um, headed down, and we could see um, the correction that we saw extend itself with bear market with the Nasdaq and possibly the S&P entering bear market territory. So that's a possibility. I don't think it's going to happen, but we need to think about that.
Well, and of course, we are expecting retaliation measures from some of America's key trading partners, in particular the Canadians. Also, even perhaps the Japanese. They have taken offence to the fact, given obviously they're big car exporters to the United States, also very big investors in the United States.
Yeah, well, like I said, let's see how long, if there is, if obviously there's going to be retaliation. We heard that just from the Prime Minister Kerry from Canada. We've been hearing that from our European trading partners. So there will be retaliation, but let's see how long anyone could withstand this. If it's a long period of time, then obviously, we're headed for a global recession, and we're going to have a situation where you're going to have negative growth with stagflation, the worst of all worlds.
In fact, we have heard more commentary from Fed members this week. Peter, how would you characterise what you've heard from them, particularly with the potential, as they mentioned, for the inflationary effects of those tariffs?
Well, again, the Fed's officials, beginning with Powell, all said we have to wait and see. It's going to take time. Inflation, when it comes to tariffs, uh, can pop up anywhere. No one really knows. But from what I've been hearing, what I've been reading, and from my personal knowledge, is if you stick to 25% tariffs on cars, you can rest assured that the increase in cost is going to be, um, maybe $3,000, $4,000. So if that's the case, that's inflationary, and that's not transitory inflation.
Indeed. Well, how is this translating, particularly as far as the US dollar is concerned, Peter? It has firmed actually of late.
Yes, I think we've hit bottom. I think the dollar index is going to hover between the 74, 76 level. Again, most likely the US is probably going to fare better than anyone else in a recession. I mean, in a trade war. Even if we wind up in recession, it'll probably be a light recession. And so, that means that rates remain higher here in the States, and yields probably move higher, and the Fed will take a longer time to cut rates. So that attracts the dollar. Foreign investors will continue to buy uh, the U.S. currency.
Now, of course, Peter, in this environment of heightened volatility and uncertainty, gold is proving to be very attractive as a safe haven. Hit another record. Are you expecting further moves there?
Absolutely. My short-term target is 3150. After that, probably 3500. I'm not too sure if we get there by year end, but it certainly looks like, there's no stopping it here. And the reason for it is that central banks are continuing to be big buyers. I expect them to accelerate their buying in the coming months. And this is all about, the trade war. So, and not only central banks, but obviously investors as well. Large cap institutionals have been big buyers, and I think they'll continue to buy. It'll be it is and will be a perfect hedge against the trade war, against the odds of a recession, a global one at that.
And what are you seeing in the energy space at the moment? I see you cautiously bearish, if you like, on oil. We're seeing movement there, in particular the US threatening those tariffs against those who buy Venezuelan oil, but more broadly, the effect of those tariffs on
Yeah,
global trade.
yeah. As far as oil is concerned, I was a little bit surprised that oil prices actually went back up to that $70 level, but I don't think it's going to last. We have OPEC in April is going to raise production. We're drilling oil at maximum capacity and probably going to go over beyond that. That is, if Trump gets his drilling wishes, and and with tariffs, that means slower demand for oil products. And I think that this rally that we had was based on perhaps trade warfare, but the trade war is actually negative for oil prices. It will cut demand. You're going to have cheating among OPEC members, and that just simply means an imbalance of supply and demand. So I think we go back down to six. I think we go down to the $60 level. I must confess that it has been stronger than I anticipated, but I don't think it's going to last.
Peter Cadillo, Chief Market Strategist at Spartan Capital out of New York. Let's come back home. Look where we're likely to get going fairly marginally lower there, down just 8 points. Perhaps also investors here looking for some direction. Many, of course, waiting for that next significant move, I should say, from Donald Trump on April 2nd. All right, stay with us. We're going to get right across it in just a couple of minutes' time.